Strength or drinking the Kool-Aid? Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of September 23rd, 2019. So I'm showing the chart here of the S&P 500. I like the S&P 500 when I'm looking at the overall market because, it's 500 biggest companies in the U.S. It's a huge swath of the market. It's not weighted. So I think it's a really accurate picture of what's going on. And what do we see here on the chart of the S&P 500? Well, let me get my pen and draw a few things. So, for 2019, we've had a high, higher low, high, higher low, and now heading sort of toward a new high. So, as long as we put in highs and the lows are higher, it's the definition of an uptrend. But this current high is kind of stalling, isn't it? This is actually a triple top. You can see we put in an all-time high in the summer and then approached it, reversed, and in the short term reversed off, approached it, reversed off. So this is looking like kind of a hard ceiling. And this is very similar to what we saw in 2007 before the market totally tanked. Now, is that going to happen? I don't know. And I opened by saying, strength versus, or are we drinking the Kool-Aid? It's the big question is the U.S. economy so strong that it can overcome, what's going on globally? And globally, most regions are experiencing slowdown in growth, even approaching recession. China, who's a huge consumer, even with the trade deficit, a huge consumer of U.S. goods and services, is, unmistakably slowing down. The Eurozone's slowing down. Emerging markets are slowing down. So there's signs of global slowdown, global recession. And there's some other things. We had the oil shock, with the attack last weekend on the Saudi facilities. Oil spiked ultimately about 15% and recovered a little bit, but the market didn't really blink. We had, the Fed had to intervene 4 times last week to control overnight interest rates and inject huge amounts of liquidity to they ultimately lost control of the short-term overnight rates and had to again inject huge amount billions, tens of billions of dollars in to try and get on top of that. They haven't had to do that since the financial crash. So that and the market seemed to shrug these things, the oil shock, the Fed intervention, it seemed to shrug these off until Friday. It pulled back just a little bit. So, I say, is there really strength? We have good economic signs in the U.S. with strong unemployment and job growth and wage growth and consumer spending, and the Fed just cut rates, but they're a little bit cautious, overall a little bit murky. In the backdrop of global slowdowns and some big deals, the China trade deal, of course, is a huge deal, and the ongoing tension with Iran is a big deal globally. So it's just a really uncertain time, and this pattern looks a little bit reminiscent of 2007, but we could ultimately power through, put in new highs, or reverse off, and you can see these moves down that we made, even this year, this move down and this move down. We could see that again, and who knows, we could see another move like this. If we do go up, my expectation is if we do put in new highs, it's going to be tepid. It's not going to be, huge moves unless something fundamentally changes. And another interesting thing that we need to pay attention to is recently a sector rotation, a shift from growth stocks. Growth stocks are typically technology, biotech, things like that. The valuation doesn't matter. These companies have amazing growth prospects, and we've seen even in the last week a pretty significant rotation of capital from growth, which powered a lot of this bull run that we've experienced for 10 plus years, into value stocks that are have low price to earnings ratios. They're high quality companies, maybe underpriced, and they also pay out high dividends. Let's look at a chart that shows this real quick. So this is from SPDR. They have a great handful of ETFs. I'm looking at a 5-day chart, and all the sectors that you would associate with growth. There are a lot of them. Communication services, technology, financials, all negative on a 5-day period. And where was the positive growth? Real estate and utilities. So these are typically value stocks, either are perceived to be undervalued or they pay high dividends. And in the last 5 days, the highest gain in stocks was in real estate and utilities. And this is representative of a bit of a sector rotation going on, where money's moving to value stocks and moving out of growth stocks. So that's all pretty interesting, and we'll just have to watch how this plays out. It could present some really good trading opportunities if we're paying attention to that sector rotation. So, could be some great short opportunities in growth stocks, and there could be some great long opportunities in value. So we're going to be paying attention to that. We're going to trade the realities of what happens. We don't try to guess what's going to happen. We pay attention to what is happening and then trade accordingly, using well-defined, well-disciplined rules with risk management. But we'll see how it goes. Again, we're hitting this limit. If we break through it, that'll be one thing. If we reverse off it, again, we could get another move like we've seen here, these last couple, or even a bigger one, and that will present some real trading opportunities to the short side, and we could see some great long opportunities in the value area. So I'll be watching those and publishing trades and taking trades on my own account, publishing them for my subscribers. But never a dull moment. There's really no planned economic reports coming up this week that I think are market moving. It's all going to be breaking news, and that's what we have to pay attention to, and just be nimble, keep some capital available for opportunities. Well, that's it for this update. Wish I had a crystal ball, wish it was clearer, but the charts and the realities of the market will tell us what's going on, what to do ultimately, and we'll follow along with that. As always, I welcome your questions, your comments, and your feedback. Thanks.